many of us see Tesla as not only a once in a generation company, but in fact, a once in a generation investment. But how do you evaluate what is a good investment? How do you consider the high risk to the high reward investment opportunity? So, anytime I can, I really enjoy and I want to talk with those investors who began to invest in Tesla way back in 2012. I want to know what caught their eye, why they were bold enough to make that decision. I want to know what they think about Tesla right now and what's the risk that they're still remaining. So, today we'll be talking with a person who was one of those early investors. We'll get him to share how he formed his thesis on the growth and market potential with the increasing demand of electric vehicles, renewable energy, and energy storage systems. We're also going to get him to evaluate the leadership team, the financials, the regulatory environment, and how it compares from the previous phase when Tesla was still competing against the original electric vehicles, hybrids, and then today what's happening now with the competition. So, ever since 2003, when Tesla was founded, it has grown rapidly, particularly in recent years, becoming one of the most valuable automakers in the world. But over that time, both the company and the stock, the business experienced significant fluctuations in value, even almost going bankrupt in 2018. So today we've got Sat joining us. He was not only an early investor, but he was also one of the 50 retail investors who was invited to join Tesla's Investors Day earlier this year. Awesome, Sat. Thank you so much. I'm glad that we finally got to sit down and talk to you.
Thank you, Herbert. Thank you for having me.
So, Sat, you're going to help me get brighter. Let's get going. Okay. So, first question for you, Sat, is that you were an early investor. I want to hear what happened in 2012. I also invested in 2012, by the way, but I wanted to hear your story. What caught your eye? And I think you told me you actually met Elon Musk around that time too. So,
Yes. Well, I was actually just reading about investments and finance. And so I've been following Tesla since at least 2007. So it wasn't a coincidence in 2012. I've been following Elon for 5 years. I was consuming
yeah,
every piece of news I could possibly consume. I knew about his background and his successes and so forth with other startups. And so by the time 2012 came around, there was already a bunch of other EV companies, and not just EVs, but other OEMs that were making EVs. But most of it was compliance cars, and then the other car companies that were making were prototypes. And
right.
as Elon said, prototypes are really easy to make, but execution and production is like really difficult. And so there's a bunch of them, from some of them still remaining, but Fisker, there's Coda Automotive, there was like Lordstown, there was BYD wasn't really a player. They did just plug-in hybrids, and they were primarily in the domestic market. And there was even IME, the Mitsubishi, there's Nissan Leaf. So there's been a bunch of Faraday Future. So there's so many other ones there. And then the only person that actually invested their own money who ran the company was Elon. That was the biggest
Yeah.
difference out of everyone. And so when 2012 came around, I didn't initially do the IPO for one reason, is because they didn't have a factory. So when they procured the factory at the new factory and they started production and they were getting ready for production, that's when I was for sure, okay, the founder put pretty much the rest of his whole assets there. And then they actually have a factory that's produced something. So that's when I was able to say with conviction that this is probably going to work out. But it was still scary, right? The psychology behind the stock market there was not there. Like there was a website for when it's going to go bankrupt and counting on Tesla, like every corner that you could think of. So there's a reason why I stayed low, and then didn't keep up with a lot of social media or anything like that, because there's so much negativity. You couldn't believe it. You think today has it bad, like back then it was really bad. And so when Elon would come out every interview and I could understand his rationale and he's putting his money behind it, I was like, okay, I could put some of my money in it, and he's going to put pretty much half his assets in there besides SpaceX, which was also at a certain point struggling at the same time. So it was very clear to me at that point that it's possible to go in. So every time I could get more money and save more money, I would go in there and then start investing more. And then I went to a New York conference in 2013, I think the first half of the year of 2013. And he was gracious enough to stay after his interview. And
Mm.
a bunch of us went up and we just talked to him. So I asked him about the truck, which became the CyberTruck 6 years later. And when I was talking to him one on one, he just talked to me as someone who was really interested in engineering and making a new product. Like I haven't had that kind of experience with CEOs where they give you like prescripted answer. It's like really PR
Mhm.
related kind of answer. They don't really want to tell you anything, but he just really dove down and talked about the product and what segment they should be in. They probably should be in the truck side too. And so he was very sincere and genuine about talking it. And I'm nobody, right? And he's willing to talk to a bunch of us and answer these questions. And he doesn't have to. He could just leave and go. And he had a bunch of other stuff to do. And that also told me that he was really serious about his product. He cared about who cares about his
Mhm.
products. That attitude was everything. Because I've been to other shareholder meetings, and the attitude towards their company and their product and service tells volumes of how they're going to go about doing things when things get hard. Not when things are great, but when things are really hard. And so that's the other thing. What I did was I've been to every single physical shareholder meeting at Tesla until they made it a lottery. So I've been to it for 10 straight years. So I've seen the growth and
Wow.
the change. And the first few years was really gloomy. It was really this like depressive feeling. And then like 2013, 14 came around and it
Yeah.
tripled and quadrupled that year. That's when it started changing trajectory. So that's the first gist of how I got into Tesla. But I've been to every single shareholder meeting and I've seen the rise. It's been quite a journey.
This is exciting. I love it. So I also invested in 2012, in exactly the same reason. It was because when he decided he was going to invest money too, 95 million is what I remember at the time. And I thought, okay, if he's going to put in the money, I will also. Um, I invested in a bus electric vehicle called Ballard that it still exists today, but it basically it's never succeeded. So I lost a lot of money. Uh, and then I saw the excitement of the 2013 rise, but I can't believe you attended all of these shareholder meetings. So you were really interested every year, and it must have been hell, right? Because the stock was flat for 6 years, and
Yes.
we just yeah.
So what was interesting is that so it's really hard to have access to the executives, right? Especially when they're a
Mm.
startup and they're super busy and they're bootstraps. So the only time I can actually ask a question directly to the executive team is at the shareholder
Mm,
meeting. So some of
gotcha.
the old videos, if you look it up, I went up in the Q&A and I asked them questions. That was my way of interviewing the CEO without asking for an interview.
Yeah, yeah,
So that's why I really miss going to shareholder meeting. Like I love talking to the executives. And so this is the other
yeah.
part that happened at the shareholder meeting. It used to be like 15 people, 30 people at max, right? So they had plenty of time to talk, right? And the first VP of retail they had was George Blankenship. And if you
Hmm.
know him, he was the VP of retail for Apple. So I asked
Yes.
him, so what's the similarities that you worked under Steve Jobs and then now you're working under Elon Musk? And the response that he told me was very telling. And that's why like I love talking to executives who work under these visionaries.
Yeah.
And he said visionary, right? He said when you're working under a visionary, when you need to shift right or left, you can
Mm.
move really fast. That's what he was talking about. And that's exactly what Elon did. You need to move fast. He was able to do it. But if you're in a big corporation, you're going to take forever to move. And you've seen the result the last decade.
Mhm. Yeah, this is so good. It's gold. Thank you for sharing that. Tell me about he actually talked about the truck way back in 2013. He'd already had that in his eye, even when he had just built the Roadster. They were still about to launch. I guess the Model S was recently launched. He was already thinking about the truck at that time.
Yeah, because people still ask, even now someone asked him about the minivan, right? So he said, yeah, it's
Yeah.
probably a good place to be in. So I wanted to clarify more on like, how serious he was about that comment. So I asked him, so, you're talking about being in the pickup truck space. And I talked to him about, if we're going to be in that space at all. And he said, yeah, it would be a good space to be in because it's one of the largest segments, especially in the US, to be in that space. But he didn't comment on that for like 5 years, right? He
Right.
didn't say anything about it for like 5 years. So unless you followed him very closely and you remember these small things, you won't remember it. And then all of a sudden it comes out. So it's not like he's saying some of these stuff that's so ahead of us that you don't recall unless you remember it. And then it's like, oh wait, 5 years later, he mentioned that. And he's actually executing on what he said. He just didn't want to focus on it. So he didn't mention it. So that's something that I know is that when he's saying certain things, he's doing the best guess of what
Yeah.
that forward thinking statements he's making, and he's trying to execute on it. He's not trying to fluff it up. He's not making this stuff up. He actually said it 6 years later. He announced the Cybertruck. So there's some like serious credibility there that people don't give him credit for. That he
Mm.
follows through with some of most of the statements that he says. There's certain time difference you have to put in the Elon time, but he definitely is a product person. He focuses on that for sure.
Okay. So, Sat, you, one of the big topics we want to cover today, right, is that you were there from 2012. And so there was an early competitive market. There was that early kind of rising startup. How was Tesla going to survive this? And then here we are today and the current environment that it is. But you wanted to like compare the two together, right? So let's start with the first phase of the early electric vehicle market. What was it like in the early years?
Yeah, in the early years, it was very much about there's no demand, absolutely no market, nobody wants to buy it.
Right.
Very short range. It was akin to a golf cart, and you had the
True.
former VP of GM really saying they'll great for making a car, but they'll never succeed and they'll go bankrupt, right? And so you
Mm.
have so many of this stuff happening, and then because of uh, the CFE standards of California, just companies making compliance cars. So there's even a Ford
Hmm.
Focus Electric. There's an IMEV. Nissan Leaf was the actual only real program that actually was put forth with a lot of money and capital. The unfortunate part of it is that this kept at that. They didn't improve it. They had like one major refresh since then, and it's really gone nowhere. So you used to have other players that had a chance to dominate the EV space, but they didn't because they didn't have the leadership and management believing in that product.
Right.
So when Elon's believing in the product and there's trouble, he puts all his assets into it. That says something about that company, that you know that the survivability of that company is much higher, even though you know the risk is very, very high. You know that the product that they're making is so good that it's going to get there. And I didn't have to see the product to know, like I didn't actually see the physical product until the latter half of 2013 when I test drove a Model S in New York.
Yeah.
Unfortunately, it was
Yeah.
high traffic, so I didn't go very fast, but just
You
after you
get to
see it,
pump it.
and yeah, exactly, there's too many
Yeah.
traffic, but
Yeah.
I could tell it's a solid car. It's going to do great. So when you see that difference in the early stages where it was all about compliance and it was no market at all, and people could just justify whatever they said, whatever they're saying today, which falls short, it was true because there's no numbers to back it up. And Tesla's, you couldn't financially model it. Also, like I asked a friend who was a financial modeler, and it's like, could you model Tesla? It's like, no, because it's negative. What's the P ratio? Zero, right? You can't do a financial modeling when it's zero, and there's no
Yeah.
revenue growth that's going to be plus anytime soon. So there's no way you
Yeah.
can model it the traditional way that you're thinking. So nobody covered it either. And since nobody covered it, the first headline that comes out is what everyone believed. And
Yeah.
they can say that, oh, there's no market, there's nothing, right? But every year they're making more progress each time. And there was a Who Killed the Electric Car, and then the Revenge of the Electric Car film too. Those were the early
Yes.
days, and people loved the EVs. And GM could have owned it too. Like there's so many players that could have owned the EV space. It's ridiculous how so many of them just passed it up. There's at least two or three other OEMs that could have owned the EV space today. But if you could
They
show the
probably knew. Yeah, let's show that slide. But they probably knew what was going to happen, where they're cannibalizing their existing ICE cars, and that they would not be able to make that transition. And so, why bother doing it? I don't know. That could be one reason that they didn't decide to do it, right? So this is an amazing table that you shared. You wanted folks to see it. So this is 10 years of global electric vehicle sales. And you can see that the years go from 2011 all the way to 2021. Let me try to see if I can make this rise up here. So what are we looking at here?
Yeah, so in 10 years ago, or almost more than 10 years ago, the market was pretty much non-existent.
Yeah.
And you can see the amount of growth that it has gone to up in 2021 for this chart is 6 point something million units. And you can see China's really pushing it too. They're going ahead really fast. So we went from 55,000 in 2011 to 6.8 million in 10 years. So that's a lot of traction that we're getting. And if you go to the bottom, you see the most best-selling EV during that time in the US, and it was a Nissan Leaf. And then the other year was Chevy Volt. Uh, Both of them are pretty much very low on sales or non-existent. So you see the trajectory. It's in the US. It's dominated by Tesla,
Yeah, let's take
and
a
it's
look at
crazy
this.
because the Model S is an $80,000 car. So
Yeah,
that's so you're talking about units that, and it's also costing 4 or 5 times more than the Nissan Leaf. It used to be like 20 something $1,000. You had the $7,500 dollar credit plus the state credit. So even despite the price being so much cheaper, because the specifications of the product is inferior on so many levels. And so this is the other part too. Like
yeah,
when you put all your money and do the right product with the right
yes,
quality, it's gonna
yeah,
pay dividends in the long run. And this is what happened in the early years that people don't realize is that Nissan Leaf made it cheaper. So they made it cheap because they thought it was about cost, right? It's all about price and didn't think about quality. It has to go with the quality. And and Elon made that decision like you have to make a good product that's significantly better. He's repeated this multiple times. But Nissan Leaf, what happened with the battery degradation was terrible. Like in Arizona with the high dry desert heat,
mm,
the
mm,
battery would get hit double digits in percentage of degradation in 1 year. It was crazy amount of degradation because they didn't use a liquid cooling system like Tesla did. They use a fan. There's a fan based cooling system. So it didn't matter how much fan that you would push air in, it still wouldn't cool it enough because it's so hot outside. Whereas Tesla spent a lot of money developing that liquid cooling system. So you don't even the battery degradation, even to this day, Tesla is one of the best, if not the best, and very little degradation for the reason they put a lot of research in developing of that liquid cooling system. And that was the first big step in the battery technology because the cooling system maintaining that battery health was the number one
right,
reason why that these didn't last. Because you could say it went 200 miles, but when the heat came or the winter came, it got annihilated, and then it was a permanent damage to the battery.
yeah,
So you would want to spend money where it's actually going to work and then last. And it wouldn't last if the battery was getting degraded so fast. So they don't account that product decline partly because the product wasn't good. It didn't have the quality to last. And the battery was pretty much everything. Now you
yeah,
have a little more leeway because it's gotten cheaper. But the battery was so important, and Tesla spent all the research on there, and they made it right. They've never been a fire with the batteries with Panasonic and Tesla, never. And yet you'd have these headlines. I'm pretty sure you read
yes,
it, where the
yep,
car goes through a wall, the driver hits a tree, and then walks out alive with minor injuries. And then the headline would be like, "Oh, there's a battery fire." It's like, did you not understand the accident? It's like, of course there's gonna be a battery fire because he went through a wall and destroyed the car, and yet the guy's alive, and they don't say it saved a life. And you have multiple events like this where literally these people should have been dead and they would be alive, and nobody would mention about the safety of that vehicle either.
okay. So I am blown away by this chart. So thank you for sharing this because, obviously we've forgotten what happened. The Nissan Leaf, the Volt, these hybrids, they were selling, but they're in such tiny little numbers at the time because people were just, not there was no real benefit in an electric vehicle except if you are a person who cares about the environment, you're going to go and buy it, but you're going to suffer through all the negative issues with it, including the batteries. Then Tesla Model S, which is 100,000 plus cars, comes out and it starts to sell, but then it really takes off once right here when they've even at that high price point it goes crazy because they weren't just selling it to against other electric vehicles. They were just saying, hey, we're just a car and we're better than other cars, and we're equivalent. And then it really made a difference, right? That's how they kind of thought of it.
Yeah,
This is wonderful. And then, of course, because Tesla started to show it, led the way, they started to show everyone else how it's done. we start seeing this. So tell me about the China market. Do you know much about this? What was driving this growth while Tesla was still primarily selling in the U.S.?
Well, I think also one thing I did do was when I first invested in Tesla, I actually invested in BYD at the same time.
Oh, you
But
did?
there's
Wow.
several reasons. Yeah, I invested in BYD as well. Uh, and I read about the founder, Warren Buffett, had invested in them. And I know that it's a good company, but there's two major reasons why I divested and went into Tesla. Is that one, it was really difficult to get transparent information from them because it was only in the China market. I don't speak the language, so I couldn't get the transparent numbers accurately in a timely fashion. And number two, they're a battery cell phone manufacturer, so that's their
Yeah.
main source of income. It was not making a vehicle; it was another product segment they were going into. So they're gonna make battery cells for cars. They started making cars, but there are usually hybrids or plug-in hybrid of sorts. And so even today, like I'm glad they're going into different markets in Europe, and they started going into Japan, and they're trying to, I guess, come into US as well eventually. But the thing is, they're coming off of a plug-in hybrid. That's where they're coming in from, and they're a cell phone manufacturer at first, so they're concentrated on that side of the business. So to jump completely 100% into the battery electric didn't seem plausible. And Elon was actually asked in an interview, like, well, there's BYD as a competitor. They've always wanted to ask him about competitors. And
Mhm.
his response was, where's the car? Because they made cars on a domestic level. So that's great. They're focusing on it. And in some sense, you could say maybe they did the right track because they want to focus on their own market first. But they weren't making vehicles that meet the federal regulation, the safety regulations for Europe or the US or for the global market. So even if they made the same amount of vehicles, it's not the same quality as a Tesla, because Tesla from day one was meant to be built for the global market. So they always built it with the safety regulations that would meet the standards of the global market, Europe, the US, Asia, wherever it was going to be. So the standard in which they had to invest in to make that happen was much higher. The crash testing they had to do takes a lot of money for NHTSA and all that stuff to clear. So they didn't have to do any of that stuff. They're focused on the domestic part. So that's part of the reason why I think they're able to, the car manufacturers in China are able to go faster because their regulation is different. If you only focus on one, it's a lot easier than to change for the entire global market. So that's also the other part. And Tesla also being part of you know, the leader, they also, piggyback off of Tesla.
Mhm. Okay, this is good. I'm glad that you brought up BYD being initially a phone manufacturer, cell phone manufacturer. So you wanted to talk about the innovation, that the business model is what mattered. And so how did the transition from the early days, right? Because the early days were, as you described very nicely, where they were really at that very beginning, just trying to prove that an electric vehicle is even a thing, that the batteries is important, and then that now where we're at today. So yeah, how do you see the innovation being a business model?
Part of it was first, I know you love Apple and
Yeah,
the iPhone.
yeah,
And I actually had a conversation around 2008 with a portfolio manager and about the iPhone, right? It had just come out as a new thing. And,
yeah.
the conclusion of that, what he said is like, well, the competition is coming. And that stuck to me because for the rest of until now, that phrase comes up so often. If I got $1 for every time I got that, I would be a millionaire
Yes,
just with that comment. It's
exactly.
crazy that you could just say, "Oh, there's competition coming," but if you actually look behind the scenes, it's like the iPhone product itself is what everyone focuses on. They think that was the innovation. That wasn't the main innovation that made it
Mm,
popular and placed it into the hands of people. And the reason why is because the cell phone back then was paid out of pocket, completely out of cash, and it was like usually
right.
$40. And then they came out with a phone that's $500. It's more than 10 times the price. So everyone was laughing at Apple's iPhone
Mm,
because it's so expensive. But the cell phone industry did not have this month to month thing where you pay part of the cost of the phone with your phone bill. That was innovations in the business model that enabled people to have it, even though the cost of the phone was 10 times more. So you doing a monthly payment, then it's a lot easier to do it. You pay 20 to $40 a month or whatever it is that was really cheap to be able to get a phone that was worth 10 times more. And the interesting part is that you think that because of the mass production that it would get cheaper, but it didn't. It's actually twice the price now. If you get one
Right.
of the top of the lines, the new one, it's $1,000. So this notion of like the price is cheaper is always going to be better, or because it's mass produced, it's going to get cheaper. No, it's not, because the product itself, the value became so much more valuable that it's a combination between a portable Palm and a computer. Because back then you had Palm, that was the newest thing they had, but people never realized that it became a computer in itself. So it actually is cheaper because you could basically have a very powerful computer in the hands of your hand. So the value has gotten up significantly more. So even the price had gone up, it's not expensive when people can understand the value of that product. And then the business model enabled it for them to get it cheaper. And that's the major part of why a normal person can actually afford an iPhone. And this is an interesting part too. I first invested in Apple a little bit, and then I switched to Netflix. And then I went into Tesla. I was
Mhm.
still in Tesla at the same time with Netflix, but I was focusing on Netflix more. And I got for Netflix, I think I got to somewhere around 45,000% return, right? And then so when I was researching even Netflix's business model, it's not just the fact that they're doing, sending DVD rentals and there was no stores. It was the fact that in the website, they had an algorithm they built so that it recommends the films in which you liked.
Mhm.
And so if a person like horror, they would give him horror recommendations. If you like action, they give you action recommendation. And that's a lot of stuff that they use today, like people take for granted, like Amazon and other
Mhm.
websites that have the products. They recommend certain ones based on your shopping history that you may like because it's in your interest. And because a certain type of licensing they have with these IPs of the movies, you get more viewership because you're recommending the audience, the viewer, what they want. So actually, the viewership went up for these movies that was you'd be stuck in the corner in the Blockbuster, or they wouldn't be available at Blockbuster because nobody would watch it. So you would have these, digital versions or DVD rentals that's available in a storage, and you could click on it to get it, and they'll recommend it to you. That was the innovation behind Netflix's business model, where they recommend it to you. So the customer's happy because they get the movies that they're interested in, and then they can go back and when they do the license and say, hey, you could pay us more because we're actually giving you more viewership. So that business model changing behind the scene is what's really important. And so even with the EV, but I don't think people put two to two together because it's so far removed, but because we take the utility companies for granted. And this is the thing about electricity. You can't like make electricity or get it from the solar and then ship it over to overseas. That's not how electricity works. You have to make it locally. So the fact that you're paying electricity to fuel your car, even if it was the same price as gas, I would still do electricity because who are you paying taxes to? The city tax, the utilities tax. So the fact that you're using electricity in your own home, in your local area, you pay
Mhm.
taxes back to your own economy in your own city. And that's going to foreign oil. When you buy gasoline, it goes out of the country. You're exporting all that extra tax dollars of the gas outside the country. That's not good for any country. So the fact that you're using electricity goes back into your local economy. That's the business model that's changing, that the influx of money that's going to come back into on a city level. So people don't realize like even that part of the difference in how you feel changes where the economics goes, where the money goes. So if you're funding billions of dollars to foreign oil and that $1 billion goes back into your own city, imagine how much more revenue they have to work with to improve your own city. So that's the part of the business model that people don't understand, that you're not just changing your own economics of just buying a car and not going to a gas station. You're actually helping your own community.
I love it. That's wonderful. I thought you were going to go and talk about how Tesla is an innovative company, and that's why you invested in it.
Yeah.
Is
So
that?
the other part,
Mhm.
yeah. So the other part is that what's interesting about also Tesla's vehicles is that because there's so much value to it, people are willing to do the calculation. They realize, I mean, at the time, it was 1/5 the cost of gasoline. So you pay 1/5 to refuel the car. So you have to put that into calculation when you're buying the car, because you're looking at the total cost of operation. And so when it becomes that much cheaper, then it makes sense, and people would actually move up. They would move up from this market segment or the vehicle that they're in. They move into a Tesla because they also had the 50 kilowatt Model S. They had the different tiers, the 85 and 50, and then they had, I think one was 40. They only did it briefly because nobody wanted it. They wanted more range. But because the product is also giving you so much more,
Yeah.
and you have barely any maintenance of any kind besides the washer fluid and tire rotation, that it made sense to have that car. So when you're looking at these numbers and the product being superior, and what's interesting is that the first Model S was 0 to 60, 4.4 seconds and 260 something miles. That was the first Model S. And then the really crazy part is that most of the other EVs don't even hit those numbers.
Yeah.
They just beat it, like in the recent couple of years. Like, and it was 10 years. It's 10 years old. That metric is still very much a standard. And so people don't realize like the product they made back then is still very much a very good product today, even
Wow.
if they did zero improvement on it. Only recently, with more higher prices, do you have cars that are going exceeding that. So what's really crazy is that, you know, when I go back to the Nissan Leaf, which could have had that market, their current car is less than that. The current car right now, the 62
Yeah.
kilowatt Nissan Leaf they have, goes less than the Model S from 2012. It's
Yeah.
crazy. So the product that they had was so good that we don't realize that we take it for granted how much work that Tesla has been doing with the product they even initially made.
Okay, this is great. I love it. You're just dropping information I didn't even know about. This is good. One thing after another. Okay, so you did a good job covering the first phase of electrical vehicle growth and how Tesla had to survive, create an innovative product, beat the existing. At that point, people just didn't even know and weren't even going to buy an EV. So now, to fast forward to today, I'd love to talk about Investor Day. We'll talk about the competitors today, the price cuts, and those kind of things. So tell me about the situation now and the competitors. Are they coming? Is that have they come?
Yeah. So one of the things I want to have it show the Nissan Leaf sales,
Oh,
and then
should we show that first?
the
You want to show that now? Okay.
yeah. Because
Okay, let's
part
see
of
that.
what I
So
want to segue into is show how even the competition that has died off and then the ones that haven't, where they are standing today. What's really interesting is that Nissan Leaf was in 2013 was around, go down a little bit.
mm-hmm. Oops. Hold on. There we go. So you want me to scroll down?
Yeah.
Yeah.
So in 2013, they sold 22,610 vehicles.
Yeah. Yeah.
So, and Tesla sold 22,477 vehicles, but it was Model S. The price of the vehicle was 4 or 5 times more. So what's really interesting is that Tesla sold around the same amount as Nissan Leaf did, but the
Mhm.
car cost like 4 or 5 times more. And at the peak, they sold 30,000 in 2014. And if you
Mhm.
go to a
I
chart
see.
for today, if you could show the chart for today,
Yeah.
and they were the best-selling EV during that year. And basically 9 years later, in 2022, they're number 12, and they sold 12,025.
Now, hold on. What are we? Okay, so just to set people up here,
This
this is the U.S. electric vehicle sales in all of 2022. So you've got Tesla Model Y right at the top. People can't see this because I had to make
Yeah,
Kia
and the number
even.
12 is where
There it
Nissan
is,
Leaf
right,
is.
right here.
And they only
So
sold 12,000 for the entire year.
yeah, yeah, yeah,
So they've done worse than they did 9 years ago. Whereas you
yeah.
look at Tesla, even the Model S is at 28,000,
The
right?
Model S, which is right, can't even see it. Where is it now? Model S would be, where is it?
Right at 1, 2, 3, 4, 5,
It's
6. They're number 6
Y3. This one.
right
Okay,
there.
yeah. Okay, this is Model
Yeah,
S. Yeah,
it's 28,000, almost 29,000, right? And it's
gotcha.
significantly more expensive vehicle, right? So they've maintained their, you know, a lot of it. They're still in a refresh. They're still ramping up on it. But the other thing is that, the other models, the X, Y, and the 3, and then Y and 3 is like basically dwarfing everything now. So they've
Yeah.
innovated and come up with new products, and you could see that even the existing ones that's there is going down. And then you have other players that's coming up. Hyundai is pushing really hard forward with the Mach-E and stuff like that. But the thing is, uh, what's really interesting is that which one of them are actually making money off of it. So even if you have
Yeah.
units, you still have to make money off of it. And Tesla has always been able to make that product with a profit. Like, they're not losing money when they're selling the product. So for their finances to get positive, it took a while, but the product itself is not negative. So, they had the cost structure set up properly. And that was the main reason why Elon had to take over in the first place, because the cost structure wasn't there. So
Right.
they've been really efficient with their capital. And I don't think people can understand that they lose perspective how efficient Tesla has been, and they still are. Even when they're having gross margins and gross profit, and all the numbers are going up like crazy, and you could be, cheering on and not look at it to do any cost reduction or anything. He still does cost reduction. He has to, they go over and then do some layoffs because they want to make sure they're lean. They're not having too many people for excessive jobs and whatnot. So they have to, and then go to the jobs that they actually need to go forward. And Tesla's been very good at their capital efficiency. So if you look at even the new players that's coming in, Rivian, Lucid, XPeng, Neo, Hyundai, Kia, and GM, I'm kind of questioning because they're like, they had the big battery issue. And so, and Nikola, which went bankrupt already, well, technically they're on their way, if not officially, but they had a valuation of several $billions, even though they were on frontline headline news that they're a fraud, right? So you have these companies that now it's the second wave of them, and then now BRD is coming back up again with their vehicles and so forth on a domestic level. But even with BID, so I want to give one color is that they include NEVs. So when
Hmm.
people are using these total numbers, it's not apple to apples. So
Hmm.
NEVs is a neighborhood electric vehicle. It doesn't have to have the same safety regulations to go through any of it. So to say that you have this explosion of NEVs sales and you put that into the total of the BEV sales, that's not a right comparison. And so it's interesting when people use these total numbers and you actually break it down, like you're not doing the same thing. It's not the same thing. And also it's way cheaper. So you can't just count like numbers and just look at the percentage growth. It's great that they're doing that and they're able to sell, but when you're comparing to Tesla, you can't say that, oh, they're doing significantly better, which I've seen plenty of articles saying that. So it's really interesting when people actually look inside of it. It's not the same thing. So even so, the interesting part is that when I looked at Rivian as well, and I want them to succeed, and I've seen plenty of them. I think the product's really great, but something's wrong with their cost structure, and
Hmm.
I'm just flabbergasted at their cost structure. If you can
Should we look
pull
at
up,
that next? Yeah,
yeah,
let's go ahead and do that. Okay. I do want to talk to you about Investor Day though, because we were talking about cost reductions. So let's
yes.
go do Rivian, and then I want to get back to let's see, Rivian. Here we go. Whoa, lots of numbers, charts, and graphs. Okay, go ahead. What are we looking at here?
So you see at December 31st, 2022, if you look at loss of operations, even the gross profit, it's negative 3 billion. Loss of operations is like 6.8, and then net loss is 6.7 billion. So what's really interesting is that their year they produced 20 something thousand vehicles. So it's comparable to the 2013 year of Tesla. Tesla sold around 22,000. So it's around the same
Hmm.
in terms of deliveries that they made. But
Hmm.
Rivian lost $6.7 billion, which is pretty insane. So in 2013, basically Tesla net loss was 74 million. So, and the prior year, 2012, was 396 million loss, right? So even if you look at like how Tesla is working, like, and the crazy part is 6.7 billion, like that's more than the entire market cap of Tesla in 2013. Like,
So you're saying that okay, both companies, Elon very clearly said that his strategy is to sell a very expensive car, uh, and then use the profits of that to sell a medium, car that's more available, and then so forth. But so Rivian is obviously doing the same thing, plus over $100,000 for the car, but they are not somehow able to create the manufacturing of this in a right-sized way. And so, yeah, Elon has already said he's warning that both Lucid and Rivian are not long for this day. He said, right, they're not long for this world. They're going to die soon. And you're saying that even when you compare back to early days and Tesla was building this car similar to the Rivian now, they still somehow kept their cost structure in check. And that's the
yeah,
difference.
because this kind of bleed. It doesn't matter how much money you have. It doesn't matter, like, if they had 16 or so, and now they have 11 billion left. But at this burn rate, it doesn't matter how much money you have. You're going to run out of steam at very soon. It's and to lose that amount in 1 year, and the amount of production you're doing, they're like, one of the things like they were doing was they announced they're going to have a second factory, but the first factory wasn't even ramped up. It still
Mm.
isn't. So it doesn't make sense why you're moving
Yeah.
ahead with these really capital intensive projects when you haven't even done one. And so that's why with Tesla focused on just one factory. They made it work as best as possible. They only made the Giga Nevada to start making the battery cells, to focus on making their own battery packs. So there's a step that they're taking, they have to take in order to do it. They're trying to maximize every spot that they're at, every step that they're at. And that's the other part that, like, it seems to be like everyone focused on the product and just the numbers or the financials of how many deliveries and how much revenue it is. But when you look at what Rivian has done, they've made a great product. The only thing is that somehow their cost isn't in line, or the pricing
Yeah.
isn't right, or maybe it's both. But I think they put too much into it and the price is too low, or their cost is also they put in too much stuff and they need to take stuff off, so the cost isn't going to be so high. But to lose 6.7 billion, and Tesla's in just a even, and that's the thing, is like cumulatively it was like 1 billion, because I have the annual report from 2012 for Tesla, right? The cumulative to
Okay.
2012 December was like $1 billion. That's what they're saying, if I'm reading it correctly. And
Yeah.
so it's and the net loss was 396 million in 2012 and December 31st, right? So when you're looking at that comparison, it's like, just because you have this abundance of capital, and the capital markets are favorable to you because of Tesla, and you have a gigantic amount and you go and waste it, it doesn't
Mm.
help anybody. It doesn't help the EV community, EV industry within itself. And Lucid's an even worse situation. And the thing is, at least Rivian has the right product in the right product segment, because nobody's done an electric vehicle for a truck that's on sale today, right now.
Yeah.
Elon and Tesla's right behind. They're coming out with the CyberTruck later this year. But Lucid, on the other hand, is like, we're not short of a luxury car. And so when you price it like 50% more expensive than a Model S, and say that, oh, you have a 500 plus mile electric vehicle and it goes the farthest. Well, what's interesting about that rationale is that in 2013 or 14, I forgot which shareholder meeting it was, Elon was asked about that, about the distance of the car,
Yes,
because
I
everyone
remember
wanted
this.
something longer,
Hmm.
right?
Hmm.
So he said, yeah, we can make a car that goes 500 miles. It just costs too much and it will price out pretty much everyone. So unless you're buying like an exotic car, you're not going to be able to buy it. So what's the point in having a car that goes that far and it's so too expensive? And yet that very thing that Elon had responded to, Lucid did. So they made this super expensive car, like, starting at $160,000 or whatever. Well, you might as well get a like Taycan or a Porsche, like or another exotic car, right? So how would you be able to sell that many and be consistent? And then their cost structures and their sales are going down, and because you have a lot of capital behind you being funded, and the capital market's stable as well, and they have a big fund that's helping them. So just because you have a lot of cash doesn't mean that you're going to be successful. You still have to be good with the product and your cost efficiency. And
Yeah.
Tesla's been really good with the efficiency of the use of the capital, that they don't give credit enough. Like, they don't get enough credit for that. The amount of efficiency that they had with such a huge headwind, and there's a reason why pretty much all the other car companies in 100 years, Tesla's the first one that hasn't gone bankrupt, and with the exception of
Mhm.
Ford as well. But there's a reason why all of them go bankrupt, because they think, oh, it's about money. It's about money. It's a capital intensive industry, but no, it's not. You have to make a compelling product that people want to drive, that has significant enough difference and advancements in it that you would forego the current one and then go into a Tesla or EV. And so that's the part that I want to point out. It's like there's something wrong with what their cost is doing to be that overrun, because uh, Tesla started out around 1.6 billion in 2012. Their market cap, I think it was less than 4 billion in 2013. 6.7 billion loss means that you're 50% more than the market cap of Tesla in 2013. So you literally go bankrupt, and then you still owe like two more $2 billion. Like like how there has to be something wrong with the management to be that far off, right? So
Yeah.
hopefully they'll get the cost structure in line. But I love the product. I hope they get it fixed, because it'll be a detriment for everyone. It's not something I want to see, but when I see these numbers, it's like there's someone's not doing their job right in that field. And to Tesla to have such a low loss compared to it, when they were like saying back in the day, it's like, oh, huge losses, there's 300 million, it's like 70 million,
Right.
it's so huge. But in retrospect, it's actually very good. They're really good with it, and they were able to hit the 25% gross margin, 30% gross margin, because as part of his compensation package in 2012, compensation package was to hit 30% gross margin on their vehicles. So I don't see that as a metric for the other electric vehicle companies. So even the metric in
Yeah.
what they're trying to hit is different. And it's interesting that they criticize Elon about it. Like Lucid CEO saying, oh, production hell is only at Tesla. And it's like, lo and behold, everyone else is going through the same thing.
Yeah.
So
I love it. So what you've pointed out is something that many of us investors kind of know but didn't really focus on, which is it's not about just creating a credible, compelling product, a car with tremendous amount of features that really changes the game, but you got to do it in a way that's cost effective, cost efficient, capital efficient, and the factories is the product. And that's what they meant when they keep saying the factory is the product, right? They need to make things in a very effective way. Production is hard. It's production hell. So you went to Investor Day, and this 4 hours of Investor Day was almost all about cost reduction, what they're going to continue doing for cost reduction, what they've done with cost reduction. So, first of all, can you share how did you get the invite to be one of the only 50 people? Are you friends with Martin Vick?
I
Do you have
would,
a lot of
I'm
shares? Yeah.
I was shocked. Maybe I
Oh,
think it probably has to do with the shares and then the length of time you've had it too, and then
yeah. Okay.
probably not to be too exposed on social media, because I met a couple other two or three
Yes.
other retail investors, and they kind of like, one guy was even less than me in terms of social media. He didn't even have anything.
Yeah.
He had a LinkedIn or something. That was it. So there's basically retail investors as in for close to a decade, or if not
Yeah.
like decade like myself, and they
Yeah.
had a low profile. And so it was really
So
interesting
that's
to
why I
me that,
wasn't
oh,
invited. I've been there for a decade, but I got a higher profile, I guess, these days. But okay,
It's
that's what
it was
happened.
hilarious too. This one guy, he actually printed a shirt because his wife got him to buy Tesla, get into Tesla, and then he's the
Yeah,
one who got invited to Investor Day. So he wore a shirt that with his wife, kind of have a little smile with a smirk, kind of being jealous. That's hilarious. He was absolutely
that's
hilarious.
funny. Okay, so
And
you got
interesting,
invited to Investor
yeah.
Day. Go ahead.
No, interesting part is that, so he was part of my group and he knew so much. I don't know very
Yeah,
much about battery, but he knew a lot about battery. And I was like, how do you know so much about battery? Like, is that your job or something? No, he said that he just reads up on it. So you have these retail investors that are just very highly in tune with a lot of stuff. And what's really difficult now is that Tesla's in so many fields now that you can't be an expert in everything anymore. Like there's certain segments that you can focus on, but you can't be expert on everything. There's so much to
yeah.
cover with Tesla now.
Well, this is cool because now I've got three friends. There's you, Matthew, and Amy. Of the 50 people that was retail investors who was invited, and of course Corey Steuben and Sandy Monroe. I know them as well too. So this pretty cool. You were there. What was your impression? What are the goals that are setting, and what other impressions did you get? Yeah.
So what was really, I saw it as a positive thing because I see the vision and the image of the future that they're trying to portray, and they're literally asking for everyone to be on the same page to focus on that because nobody's looking that way. And it's almost like the famous quote by Wayne Gretzky is like, "Be where the puck is
Hmm.
going to be." And
Hmm.
so that's essentially what Tesla is doing with the master plan 3 is they're saying this is the direction that we're going to go and this is what we need to focus on and to get everyone on board. And that's the thing. It's like when Elon said, I think it was 2015 or 16, I forgot the exact year. He said that, oh, we're going to project to do 500,000 cars in 2020,
Right.
and they were like
Shocker.
499 point something, like they were off by a couple hundred vehicles.
Yeah.
So basically they were
Okay.
able to meet that goal, but everyone was saying they're crazy. That's not going to happen, right? Because they're making like 50,000 cars, right? Right. And so, and like the suppliers aren't believing them. Like they go to back to suppliers like, oh, wait, well, we thought you're not going to make it. So we only made a few thousand, right? So they're going through this situation where like nobody believes them and the suppliers don't even believe them. And so when Elon hits 500,000, it's like, well, oh yeah, now it's like, it's reality. So everyone's like, oh yeah, okay. But wait. Before that, everyone said you can't do it. It's impossible. And so we were able to do it. Tesla was able to do it. And then now with Master Plan 3, it's like, oh, we're going to do 20 million vehicles, and then we're going to use zero rare earth materials, and then increase the storage by 20 with 240 terawatt hours. Like these numbers are like, I can't even grasp right now because it's so huge. We're just talking about gigafactory, like gigawatt section. It's like now it's a terawatt, right? So people don't realize like these numbers are so huge that they're way out there. That was like, oh, we can't even figure out that. So it's like we're going to focus on the one thing that we can, which is 20 million vehicles. But there's so much more to it: the cost reduction and the land usage and how much you're going to use in the factory. So like when you're talking about that, it's like, wow, this is like stuff I didn't even think of. Like they're going into the factory is the product part in depth. That was pretty much part of that whole underlying current of they were unveiling an entire product line and saying this is the trajectory we're going to go, and then everyone's focusing on this like, oh, how are they going to get the 20 million vehicles, and oh, it's they didn't provide enough information. It's like, well, if you don't say where your direction and your goal is, you're not going to be able to make anything happen. And if you don't
Mm.
plan it, even if you fail or if you're delayed a couple of years, if you don't write it out, you can't make it happen. So you have to make this goal happen because I don't hear any of the other OEMs or the other battery manufacturers saying they're going to go out and do this kind of investment or at least try to make this happen. So when Tesla's making this happen, you're trying to get every sector of this whole production line from the ground of digging up the minerals to making the car all the way to the factory and then shipping it. Like you're trying to revolutionize that entire part. And so I thought it as like, wow, this is a lot of information. I got to digest this. So it was like he's putting the goalpost way out there now and saying, this is where we're going to go. And somehow that doesn't seem to translate into the media because when I'm there and I'm seeing the production line, I see the tour and then talking to other people and I see the presentation and then I come out and I see the headlines. It's like, did they not get any of the stuff that they're talking about? It's like, I feel like it's night and day when what I saw is really fascinating to me. Like this discrepancy of what I saw versus what they're talking about.
Okay. So you're very, very excited, as we all are. Many of us are still very pumped. I do need to bring it to the topic of price cuts because there is a kind of a chasm right now between Tesla investors. Many of them are complaining. What's going to happen if you keep cutting prices and you're not going to have any margins and Tesla stock will not rise anymore? What's your opinion about this? What's your position
Well,
on this?
the price cut isn't to the point where they're not making gross margin. So I don't know why that would be an issue in the first place. And the thing is, like, when I first bought my Model 3 in 2018, they did like basically I did a reconfiguration, the same thing, about 18 months after. It was like $12,000, $10,000 cheaper, and it's partly because of the credits, the $7,500 credit, and the state incentives. So, but even including that, it was still cheaper if I remove that as part of the incentive, it's still cheaper by a few $1,000s. So I didn't see here anybody complain then. Everyone was rejoicing that it was way cheaper and it was more affordable. So I'm confused with the run up of all the commodities and lithium, and because of the pandemic, the price has gone up. So it would be normal to put it back down. It doesn't make any sense. Like, even on just that scale, regardless of whether there's this quote unquote issue of demand or not, they would still bring it down because it went up so much. It was like 50% higher than it was before. So why wouldn't you bring it down when your cost structure is down and your cost is lower? And the shipping isn't like 5 times more or whatever it was before, right? So that's coming down. So why would you artificially keep it up? Like some of these OEMs, like I'm starting to read news, like other OEMs purposely restricted making vehicles to retain their value of the vehicle, so that if the leases come back or the leases default or whatever, they could sell the car for the value that they had projected. So they're actually trying to control the price to artificially to keep the price of the vehicle, whereas Tesla is trying to get it into as many hands as possible. So I'm confused on why it's a negative thing to do the price cut in this economic climate. Like nobody predicted they're going to be like 7% from 2%. So you have to adjust to what's happening in the economic climate at that moment. So it's not like it's going to be to the point where they're going to keep on doing price cut. They make no money on it. That's never been the equation for Tesla, and they've always made money on their vehicles. So it's interesting to me that this price cut has such a negative effect on the current climate, when in 2019 it didn't. People were actually happy that it was way cheaper. So I'm kind of confused because it's not the first time that Tesla has price cuts. They've raised the price and then lower it depending on the situation. When their cost comes down or the economic climate, they would change the price based on it. The difference is that Tesla does it publicly, universally in those regions. It's not biased. It's not like one dealer gives you one, like there's a markup 10,000
Mhm.
above MSRP. Like you don't have that situation because it's always consistent, right? And then some people could feel like, oh, they could have gotten a better deal if they waited, that they're at that change time when it's like 3 months ago it changed, then they could have bought the car cheaper if they waited a little bit. So do you have some of the people like that when you're at the bad timing of it, but it's universally the same for everyone. So it's interesting to me that when there's price changes, depending on the situation and economic time, then people react to it differently. But these price cuts is not something that's unusual. It's been a normal part of operations for Tesla for the last 7, 8 years since they got the Model S out. So I see it as part of the normal activities of the operation.
Okay, so you're pretty confident that are you still projecting by next week earnings call that you're expecting an auto gross margin of at least 20%?
I'm not sure exactly what percent, but I think that would be a pretty good number to be around because I don't think it's going to go down too far. But my
Yeah.
thing is like also it's like I'm not so focused on the quarterly thing. If it goes below it 1 quarter, they're gonna
Mhm.
fix it sometime later, right? So it's not that's the point of what these numbers become. It's like people are trying to change the investor day into earnings call, and I was in one of the chats, and I said it's not an earnings call. So when they're saying like, oh, they didn't
Mhm.
give us these numbers that would be typical
Mhm.
for an earnings call, it's like, well, it's not an earnings call. And so when people try to delineate into a quarterly number, and what if they don't meet it? Well, does that mean that you're going to sell off all your shares, right? It doesn't make any sense to me. Like just because you buy your house and then a month later it goes down in value, you're going to go sell your house again. Like that's not the mentality that I have, because I believe I'm a part owner of the company. So if they don't hit that margin, I'm sure they're going to fix it somehow. But the fact that they're still making a great margin on it, it's going to be a great margin compared to other companies. So you have to take into account it's from Q4 to Q1. Q1 is usually typically the lowest time of sales for automotive. There's the holidays, people have to pay their holiday bills and so forth, right? So the fact that they're continually, consecutively going positive in amount of deliveries, the revenue growth for the last 3 years, and people don't put that into context that the other companies have gone negative 33%, negative 25%. So they could have gone up the last couple months or couple of quarters, But overall, the last 3 years, they've gone down consistently. And some of them, like if you look at 5 year chart, like I think it's Ford, it was like it's going down slightly. Like so, like it's not going up. So when you have to look at it from like, okay, this quarter, okay, draw it back to the year, 3 years, and 5 years. Where is the trajectory going? So because when people focus so much on these like one number, okay, this one quarter went down, so therefore doing so bad. No, it's not. You have to look at the whole context of it. Because if you keep on doing that, it's like, well, you're gonna go sell it tomorrow, and then you're gonna go buy it again tomorrow. It's just like, well, if I did that, I would have never held on to any of my shares because. So this is one thing that happened, right? In 2013, two supposedly key engineers, one who eventually becomes the CEO of Lucid,
Mm-hmm.
Tesla. I mean, he didn't. There's a lot of issues around that, but so people reacted negatively to it, right? The headlines go crazy, and in one day, the worst single day for Tesla's stock was negative 19.9% after that announcement. The two key engineers had left the Model S program. So people can overreact on so many things, but it's just like it's the program itself doing well and where it's headed towards to. So this gross margin, if it doesn't hit 20%, then they'll figure it out by next quarter, right? So if it doesn't, it's not a big deal for me because I've been in it so long that there's been up and down, way worse. And people talk about like the last year being like really bad, it gone down 50% or
Mm-hmm.
whatever, and it's like, well, did you see from 2016 to 2019 like that 4 year period? If you
Yeah.
like pinpoint, there's a section where you could actually buy the stock cheaper in 2019 than 2016.
Yeah.
So that whole 4 year period,
That's
I still
crazy.
held on to it. I
Yeah.
mean, I didn't look at it often when it was going down, but I still held on to it. But if you read every little detail, every little number, and it didn't go your way, and you're going to go react to it and then go buy and sell depending on that, you would never get anywhere with it. That's why like when you're a long-term investor, you're looking at the bigger picture, and you understand that if one quarter doesn't meet your numbers, then you just look
Mm-hmm.
at the next 2 quarters, 3 quarters. Now, if it happens every quarter for like a whole year, then you might have to readjust and reassess the situation. But that's not the case in this situation where it's going up, and it's so when you do a price cut, yeah, you're gonna have some of the margin go down maybe, but maybe the cost went down too. That's why they're able
That's what
to
I'm thinking.
give it to
Yeah.
the customers, right? So
Yeah.
I don't think that's gonna be like the cost is the same as before, as Q3 or Q4, and then say, oh, we're going to do price cut just because we want to get more deliveries. No, it's because they're not looking at the stock. They're looking at the cost of the product and if they could lower it down or not, and then the interest rate and so forth. There's so much stuff that if people can't buy it, then you have to figure out a way for them to buy it. But when you have 7% on your car loan, that's a huge difference, and it's affecting the housing market too. Like people don't want to sell because they can't buy. Typically, you have to sell to your house to buy the next house, right? So well, you can't buy it because of the interest rate, so nobody sells. So now you're in this downward spiral where like people are holding on, and there's very limited houses even on being offered on to be sold. So this whole climate is affecting everyone in every sector. So you can't take it out of context as well. It's just like, oh, there's this one
Mm-hmm.
quarter, it's not going to be to your standard, to the estimate of it. And then what's really interesting is that somehow Tesla is like taken out of context when they've gone up green every single quarter in the entire pandemic and now. And like, wait, am I missing something here? It's just like the other companies are going negative, and yet they're like, oh, they didn't meet their estimate. Like,
Love it.
it's like they had shut down,
Let's get
lockdowns, like it's like
yeah.
so.
Yeah, let's get back to the financials of Tesla. We'll end with that, but I want to ask you again about Investor Day. You said something about you had met Franz and you heard something interesting.
Yeah, what so this is also goes back to the how they're always keeping in line with their cost structure and capital efficiency is that we're in the meet and greet stuff, and then and someone asked him about like, oh, would you offer more colors because people want more colors, they're kind of tired of the 6 colors, and so he responded basically saying, you could have 100 colors offered, right, and someone's still going to complain that it's still not good enough.
Yeah.
Someone's going to complain about it. So you have to be efficient and streamline what you want to focus on. You can't do everything. You have to do what's like the most best choice possible and then the most capital efficient. So you can focus on adding more colors and more options and more interior options and whatnot, or you could focus on the next product and focus on the next batteries, right? That like where's your focus on? And if you really want a color and you're not going to buy a car because of a color, then you could just invest in a wrap, right?
Mhm.
If the color is the reason why you're not going to buy the car, I think you're also not in the right space in terms of buying that vehicle. So I
Yeah.
think the emphasis on like having so much choice in all these interior choices and whatnot, I think becomes more of a hindrance when you're trying to streamline it. And so this is the other interesting part because I took a transportation design class and back in the day, right? So what's interesting about the fact that Tesla hasn't changed their design very much, it doesn't feel obsolete
Mhm.
because
Yeah.
the Model 3 that's sold today, right, is the same as my 2018 one. So you actually don't feel the difference. But if you have a new like model, exterior model, every single year, every 2 years or whatever, then you feel like you have an older model. But the other thing is that like since I got my car, also like the OTA, they got the
Interesting.
creep, they got the car got faster, right? They have the the FSD beta. Like my car is better now, significantly better than when I bought it. So I don't feel like it's old. But when you have this reiteration of design every year, every few years, that makes it
Mhm.
look old too. So it's a constant part. You're not focused on the exterior of the vehicle because you have nothing else to work on. You have so much more to work on, including the software where they've been putting a lot of time
Mhm.
into. So you see that difference in the focus and like where you're focusing on that makes the most return on your product. It makes the best product where the people who are buying it are going to be happier even after they bought it, right? So the other car companies aren't quite doing that. And some of them, the Rivian has an OTA thing, but like all the other car companies, you have to go into the dealer to update it. So even the model itself is not it's set up the same way. It's Tesla is working off of obviously the way the iPhone has the OTAs, but for a vehicle now. And then you have FSD beta that's like significantly changed the outlook of the vehicle. And that's the other part too. It's just that they don't talk about like that focus is just as important. And if you focus on so many other things and the customers want all these other options, you're not going to be able to go to the next step. And maybe that's the change that we need, right? Like I
Yeah.
charge
The
at
big
the
ones.
mall. I don't charge or at home or at the mall, but I don't charge at the gas station anymore, right? So your
Yeah.
behavior is changing already depending on the product. So maybe we shouldn't need to focus on design and color options and have it different every other year. Like maybe we should just focus on the actual product within itself and it only change the exterior design once in a blue moon because
Yeah.
that's not doesn't make me happier. And besides, the other thing is like I'm in the car, right? I'm not looking outside the car the entire time. I'm in the car, so I'd rather have the features in my car improve than the exterior of it. And so that's also a shift in mentality too. Like before, you were like, "Oh, I want a newer design car because that's a newer one." Because nothing in the interior improves after you bought it, but in the Tesla, it improves the inside. It actually improves. So I just feel like there's this focus that needs to be changing, and people haven't
Mm.
caught up quite to that point.
No, that's all good. So you are bullish, right? Pretty bullish
Yes.
regardless of the macro, or you're just going to hold on to it regardless, or again, you're not worried about the price cuts, you're not concerned about the margins. You said that maybe it'll impact this quarter, but they'll make up for it in the future. You're still very much a long-term person, and so you're bullish at this
Yes.
point, right? Yeah.
Yes. Well, the other thing is also that it's not like the products aren't getting better and they're not working
Yeah.
on the cost structure and the manufacturing, right? Before, when my 2018 Model 3 did not have the single casting, now they had a single casting,
Right.
right? So
Yeah.
instead of having 70 parts, they have one, right? So it's also like, one thing is that one thing they also showed in the production line was with the motor, right? The motor had changed and they improve it. So everything they showed in production line is like you see in a regular production line, but they improve every part that they can improve on. It's not like, hey, we just got this. Okay, we're going to keep using the same thing. And you've seen that happen in the industry where they just keep on using the same thing and they don't innovate it.
Right.
So they're actually
Yeah.
innovating everything you think that you don't need to innovate anymore. They're still innovating on those and making reiterations and making it better. So it's not like you just focus on the new parts, but they're also focused on the entire thing that production line even now to improve it. So that's why when the investor they talk about the unboxing stuff,
Yeah.
that I feel like that's the next generation. I also studied about mass production going into lean production. And so this is the other part why I'm much more bullish on Tesla and why they can keep on doing stuff they're doing it because they're changing the actual processes that they're making the product. And
Yeah.
this is the other part that like Toyota, I wish would focus on it because they make great quality cars. My family's had it for many years and so forth. But the thing is that I don't think people realize, okay, why aren't they changing or why are these OEMs not changing? Is because Part of it is because they built these relationships with the suppliers. And you have relationship with the
Yes.
suppliers. It's not just a business relationship you've had. Some of these relationships, like in Toyota and other, maybe even Nissan, they actually, some of them own part of the stock of that supplier and vice versa. So it becomes more like a parent company and a subsidiary kind of relationship. And the reason why
Yeah.
they had that is because they could go into the other company and say, hey, this part we need better quality control. So let's look at what's going on in the process and let's improve it. And they'll be able to do that quickly, and they've had permission to do so because they're working together. So when you have that relationship, it's great to improve the product. But it's not good when it's like a revolutionary situation where like, the internal combustion engine has 270 plus parts to it, moving parts to it, and then the electric motor has 12. Well, now you don't need all that stuff. So what happens if you're one of the suppliers of that engine part? Well, you don't need it anymore. You can't get rid of it. So you
Mhm.
had that business relationship. You own each other's stock, and then you have this financial part that your marriage, sort of like a marriage. So now you can't like detach from each other when you don't need that entire part anymore. And so I think that's why the shift is so much harder, and they're trying to shift into like the hydrogen kind of thing where it mimics the
Yeah.
same business model.
Yeah.
So again, they're trying to mimic the
We-
business model. So so the business model on Tesla side is like, okay, let's just improve the entire process so that we make it even cheaper. Because if you wait, so this is the other thing that my interpretation was like, if you waited for the battery improvements to get there, we can get there with just the battery improvement. It just takes probably 20 years longer. And part of the reason why it's like one of the information I looked up was the first rechargeable battery was by Sony in 1991. It was 3,000 kilowatt, $3,000 per kilowatt hour. And today it went back up, right, from 2021 at 151 kilowatt per hour, somewhere around there. It's still 95%, 96% cost reduction from 30 years ago. So you have to understand that if you waited just for the battery technology to get better, you can get there. The problem is that you have to wait longer, and we can't be waiting that much longer. That's why they're creating a whole entire assembly situation that's like the unboxing method that's going to be different. And even for CyberTruck, get rid of the painting for that matter, right? It never occurred to any of the other OEMs to get rid of the painting itself, right? It's like
yeah.
6-7 hours of drying, take the body part out, put it back on. Like if you see in a production line and you eliminate that entire part, that's a huge chunk of the production line that you don't need. So you become much more efficient at what you're doing. And then the people who really want a color, you could pay a little extra and then make that color the way that you want it. So this whole thinking process where you're literally upending the entire process of production, that's where the focus needs to be to get this part cheaper. And then before, like, so this is the thing when Tesla's like innovating the product, but we're thinking everything as the same as the past. So what happens at a gas station? Where do you charge and all this other stuff, right? So like 20 million cars. Well, you're using today's numbers, like, well, that's impossible because like 40% of the market, et cetera, right? But we have to upgrade the way we look at it around that product and that whole even the factory. So when Giga Shanghai went up and Berlin and Texas went up, we're like, oh, you need to get to 20 million, we need like 10 more factories, right, to take over the entire
Yes.
fleet. That's what
Right.
a lot of us said, right? Because we're
Yeah.
using yesterday's thinking. But with the Giga Mexico, it's uh, basically half
One
the
fourth.
footprint inside the
Yeah.
factory, and then
Yeah.
the factory is double the size of Texas. So by that
Yes.
calculation, it should be somewhere around 6 to 7 million vehicles,
Some people
just
saying
off
the
the top.
factory is not double the size of Texas. The land that they purchased was. They haven't clarified that the factory itself. I was told that, but still,
Yeah.
it's probably gonna be
So
bigger.
we don't know exactly the size it's going to be, but we know for sure there's going to be significantly bigger, better production rate and total amount that they can produce. So even a guesstimate of 6 7 million, wherever it's going to be at, it's not going to be 1 or 2 million that we had originally calculated. So that changes the way that you look at, well, how many more factories do we even need on the production side, and maybe they need one more. Because
Yeah.
the other
Just
part that is like they're making all these announcements because everyone's focused on Tesla. Like they're expanding, adding parts to Giga Shanghai, to Giga Texas. They're adding more to the factory. So the original amount that we had calculated has to shift too. So they're constantly innovating the actual production side too to meet the demands of what they're trying to do and innovate the process in which they had. And so I think when you're looking at the production line and they're saying, okay, we're going to do this unboxing thing where you don't have to take it off, you just put it all together at the very end. That process and how they take apart those parts and how they implement into the previous factory is also it's an interesting part that I look forward to, because it's not just that you do it in the new factory only. You're gonna have to start somewhere with the other parts in the other factories. So they're gonna implement that way too. So single casting with the Model Y, now it's in the Model 3, right? So it trickles down to everything else that they do. And so we have to think in terms of, okay, what is it going to be over when they're going to be able to do that? What the climate is going to be like? What other elements is it going to be that we need to change our thinking to match it? So even this the competition is coming, and the demand issue always comes up. I don't know, every couple of years the same thing comes up. I'm pretty sure you noticed it, right? The last decade, everyone's saying the same thing again. It's a demand issue, and it's like I think it's the difference between like the people wanting a vehicle and then being able to actually get the car and afford it. That there's a difference. Just because the numbers went down one quarter doesn't mean that they don't want the car. And because if it goes down consecutively and they've done price cuts, then you can say that, which has happened with the other OEMs. The price, like, it's not just the price, it's already lower, but the sales are going down. So there's this part that I feel like we're using the yesterday's way of thinking, even the advertising thing that's been coming up, like yesterday's way of thinking, to basically attach the solution of what Tesla's doing for tomorrow. Like even the advertising was interesting. It's like the TV ads and stuff at Super Bowl, they don't put any of it, but it like spiked the amount of people having interest in Teslas, right?
Mm-hmm.
But because of that spike, were they able to sell more cars? Like I don't think they can meet the demand already as it is. It's just, and then if one quarter isn't as stellar as the other one, I don't think it's a reason for it. And the problem with also going into these traditional like past way of doing things is once you get into that one, then now you're kind of in that cycle. So if you go into, okay, let's only do 100 million of advertising. Well, if the other competitor is spending 4 or 5 billion, they're still going to prioritize them. So unless you go start putting as much as they do or somewhere close to it, you're not going to be noticed and not going to be prioritized, because now you get into that hamster wheel of playing their game. And it doesn't make any sense when we've gone this far without it.
Interesting.
And there's other avenues that's already popped up that you don't have to use that. And that's a shift in also the system in which you're using for advertising and marketing. The word of mouth is still the strongest. Somehow everyone knows a Tesla, right? If it's an EV space, they know Tesla is there, but they've never done a single advertisement, right? And if you, and this is the other part, maybe people may know that these content creators like yourself may know, is that if you use a video that Tesla made and use it in your YouTube channel or wherever video that monetizes, they don't ever flag you or say anything.
Yeah.
But if you do that with any other OEM, they'll copyright flag you and demonetize you, like really fast, because they want to control everything that's there. Why? Because Tesla is confident that their product is good, that they can hand it off to someone else and let them talk about it, have a whole channel on it. They're confident enough that the product is good. That's why they can do that. If you're not confident with your service or product, you wouldn't be able to just hand it to someone, a third party, and say, "Hey, you do the review." That's how I see it. That's why like I follow so many YouTube people who are Tesla related, talk about YouTube stuff. Tesla stuff and the financials in the product. But if you don't have confidence in the product, you can't do that. So it's also changing the shift in mentality how you advertise. And then you only have to make that content once as the OEM. You only make it once, and then you give it out freely to the other content creators who want to talk about it. And they make money by making their videos around that. So everyone wins without incurring more costs. But what happens when you make an advertisement and you sell it once or use it once? Well, you have to keep on paying to have it showing over and over again. You're going to go to another place, another channel, you have to pay more again. So it's not just the initial cost of making that advertisement. Now you have to keep on paying for it. So I think the social media ads obviously starting to take over and whatnot. And I think that's more of an avenue if you're going to do advertising. Elon has Twitter and so forth. But I think the way that we're thinking as what I understand in Investor Day is that we have to upgrade the way we think about everything around us, not just the product. And that's the harder part to grasp it. And like they did basically a product unveil without doing product unveil. Like there's two things that's covered in the blanket. It's like on the side. Well, they didn't unveil without unveiling. They said everything around it, how to make it. They're gonna make it efficient and whatever, but they didn't unveil it. So I feel like it could be a bus, it could be a van, and the Gen 3 platform. So there's a lot that's there that we don't know about, that they've made these guesstimates. And I put in on the Elon time, so maybe they may be off by a year or two. That's the way I
Mhm.
look at it, because you can't be projecting that far out and be precise on it. I know someone's gonna say, "Hey, you said it's gonna be 2030. It's gonna be 20 million." It's like, well, that's the best guess they made. I know there's gonna be there because it's never a straight road. It's never a straight road. It's never have been, right? So they think that's the best calculation they've had so far with the stuff that they're working. So my interest is also, how are they going to go to zero rare earth materials? It's like no recycling or no uses at all. Like, how do they switch from that, right? Like, that's more of like, how do you get there is what's more interesting, and as opposed to saying, oh, those numbers or those stuff doesn't work. Like, I want to know how they're going to get there. That's what I want to understand. So, and it's like, I asked, because I've done design stuff. I asked Franz about design stuff, about like, so why didn't you put the Model S turn signals on each side, right? Well, if you try to grab a drink with one hand and you need to press the signal, you can't. You have to put down the arm then, right? So they've thought through a lot of the stuff that we think that it's a little annoying, or because the perspective that we're coming from is from a regular car. So they've tried a lot of stuff. They've thought through certain parts. It's like, well, these design stuff, that's been out for 5 years or whatever else. They've thought through a lot of stuff that seems like we can't understand, but they've gone through a lot of these processes that's really interesting, that I think we don't really give them credit, that they've thought through this stuff and they made the best guess possible within the means that they have. And I'm
Yeah.
pretty sure they know more than we do.
Oh, I'm pretty sure too. Okay. Thank you so much. That was a lot of fun. I love the way that you went back and shared with us the history of what happened to the electric vehicle market and the competitors way back early on. What made Tesla succeed wasn't just a great, compelling car, but the business model and the cost reduction, focus on cost. And then we talked about right now, this year, what they're focusing on. You've got a lot to say. I want to bring you back. You got to come back,
Thank
talk
you.
about other topics. But this was a great one. I feel great. I learned a lot. And I usually bring people in that I haven't spoken to before, and you're just a new one that I'm getting lucky. I appreciate that
Thank
I
you for
found
having
you.
me.
And yeah, it was Xander Sky who introduced me to you. I've known you. We've met and talked in Clubhouse a few times. So you got to join me on Xander on Cyberbulls one day,
Oh, I
and we'll
love to.
talk
Thank
stock
you.
and investing. But this was great. Thank you so much. So, folks, follow Sat on Twitter. He has a handle at SA_futurist. I'll put it in the descriptions. Thank you again, Sat. So, I'm pretty sure you guys learned something, got you a little bit brighter, something you didn't know before. So, please subscribe, follow Sat, and thank you very much. Thanks, everybody. Thanks, Sat.
Thank you.